Hello and welcome to the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Daniels Midland. Today's panelists are Alan Bush, our senior financial economist, and Mark Soderberg, senior ad market specialist. We'll start with Alan today. Alan, what are the potentially most market-moving economic reports out this week?
Well, first of all, tomorrow we'll have the producer price index that's expected to be up 0.3%. That will be for February. Also, tomorrow we'll have retail sales for February expected to be down 0.3%. Then on Thursday, we'll have February housing starts guessed at 1.315 million and permits at 1.34 million. And then finally on Friday, we'll have the March Consumer Sentiment Index guessed at 67. And also Friday, the February leading indicators anticipated to be down 0.2%.
All right, Alan, what do you feel the Fed will do at its March 22nd policy meeting?
Well, it was just a week ago that most analysts thought that we would see the Fed hiking rates by 50 basis points. That was, of course, before some various flight to quality issues developed. Now the consensus view is that the Fed will be hiking by only 25 basis points, and there's a small chance that they may keep rates unchanged. So I'm going to go with 25 basis points. I think that is in line, and I think that is most likely what the Fed will be doing at the March 22nd meeting. A 25 basis point hike, I think, is very likely.
All right, and the banking sector has been a hot topic for the last couple of days. How do you feel the markets are reacting currently to that?
Well, the issues that we had over the last several days in the banking sector have caused some impact in the industrial commodities. It has, I think, been a negative for the industrial commodities. So I'm still looking for sideways to lower for crude oil and the lumber market. But there has been some flight to quality that has come into the precious metals, especially the gold market. Of course, the silver is caught between its industrial component, so to speak, and its flight to quality component. So the silver will probably just, I think, trade sideways to higher, but I think the gold will probably continue to advance for a variety of reasons, including a potentially less hawkish Fed. Also keep in mind that central banks have been major buyers in recent months of gold. So I think gold has a lot going for it. So I think the gold will continue to advance.
All right, thanks, Alan. I'm moving over to Mark. Mark, what key factors will drive agricultural commodity prices this week?
Well, after having a bit of a risk-off day yesterday, I sense the agricultural markets will not see much impact going forward from the recent banking issues. Regional bank stocks today have seen a nice rebound. Also this morning, it was announced the Black Sea Grain Initiative had been extended. So after weeks of posturing by Russia that the existing deal was not working and threatening to only agree to a 60-day extension, it's now believed the deal has been extended for 120 days. So given the reaction in the wheat market, however, it seems that it's already been discounted in the marketplace. Also this morning, the USDA did announce a big sale of corn to China, something that had been rumored since the sell-off late last week. With a 612,000 ton sale, or roughly 24 million bushels, it's not likely to cause the USDA to reverse course and start to increase their export forecast. This after lowering it by 75 million bushels last week, but it should help. The U.S. should have a nice window here for a few more months until the second corn crop from Brazil starts to become harvested for the U.S. to rack up some pretty good sales. Something that we'll just need to see just to reach the current USDA forecast.
Hey, Mark, what's the latest with South American?
Well, unfortunately, Argentina just has not had much or any relief in recent days from the severe drought that they've been experiencing. With no rain, temperatures have soared to over 100 degrees for several days. We just continue to see lower and lower production estimates. The USDA lowered their numbers last week. Corn down to 40 million metric tons. Most private guesses now are coming in around the 35 to 37 million metric ton range. Soybean guesses are coming in under 30 million metric tons now, and this after the USDA lowered their estimate last week to 33 million. So by the time rains do arrive, I think it'll be likely too little too late to have much meaningful impact on production. In Brazil, production estimates are holding at record levels. Last week, their soybean harvest had just passed the halfway point. That's down about 11-12% from the historical norm. Second corn plantings had reached 82%. That also down about 11-12% from where they normally are at this time of year. Forecasts this week continue to suggest above normal rains, likely keeping progress slower than normal, but world weather does see a break here this last week or so of March, which should enable harvest, soybean harvest and corn plantings to get going again.
All right, Mark, finally, what's the latest on the positions of large speculative traders?
Well, the CFTC is slowly getting caught up from the 3-week delay on reporting the commitment of traders data. In last week's report on Friday, this is a position data from February 21st. At that point, money managers, they were still holding a record long position in soybean meal. They remain long the entire soybean complex, with the cumulative totals being the largest in just over 2 years. In corn, they had cut back a little bit on their position there, but they were still holding a long position at over 216,000 contracts, still rather sizable. And really the only market they have a short position in is in Chicago wheat, and that position it's swelled to over 72,000 contracts. So we're likely at a much bigger short position than that right now.
Well, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.